Sell everything. Now hold it right there. Don't get carried away by the euphoria of the markets and think with a cool head. And if you really can't do that, at least watch this video to the end to give you a better overview of what's to come in crypto and also Bitcoin. Yo, all crypto fans around the world, how are we doing? This time I want to bring you a very informative video to understand a little of what's happening in the crypto world. Is Bitcoin going to reach $0? Could it be that the golden age that investors were predicting is over? Have the larger institutions that invested millions of dollars in Bitcoin made a mistake? What is really happening with crypto? These are all questions that have more than one of us very anxious. But today, I will give you in your hands invaluable information so that you know a little of what's happening and you can make a decision in the wisest way possible so that you can take care of your money. But before we begin, of course, I invite you to subscribe to the channel if you haven't already done so, and also turn on those notifications so you don't miss any new videos. Now, like I've said before, let's go ahead and get to the video. November began with a bumpy start with the bankruptcy of FTX, one of the world's largest digital currency exchange platforms. Days later, the exchange BlockFi also declared bankruptcy, with news that a third, Genesis, is suffering liquidity problems and rumors that digital currency group's Grayscale Fund could be affected by the collapse of FTX. Fears of a crypto crash are beginning to spread. The crypto community is growing in nerves that the chain collapse of several big players in the digital currency market could just drop the value of Bitcoin to $12,000. And let me just note this, that's the biggest cycle pullback we have ever seen in Bitcoin. Here's the truth. The future of Bitcoin today is a real mystery to shareholders, except for those who know how to decipher its variables. However, digital currency analyst who sticks to the dollar on chain, Philip Swift, made an encouraging forecast for the future of Bitcoin. And this is according to his research based on the Bitcoin market indicators. But let's take a pause for a second before going on with the future of Bitcoin. We talked about the crash of FTX and how it affected the market, right? But do you know how the FTX crash actually started? So let's just take a step back a little bit and explain it a little better. The first warning came in August from the Federal Deposit Insurance Corporation, a U.S. regulator, which warned that the company was misleading users, i.e. us, by claiming that their savings were protected by the government. Just a few weeks ago, the specialized site CoinDesk warned that the investment vehicle linked to FTX, Alameda Research, was strongly linked to the token of the same exchange, FTT. This generated concerns in the market given the huge percentage of the company's value that responded to an investment that was issued by the company itself. Within 2 days of this release, Binance CEO Zhao announced that his firm would sell all of its FTT assets due to recent releases, although without any reference to the Alameda Research. The consequence of both has been a massive investor sell-off and a more than 90% drop in the value of the FTT coin, which is among the 30 most popular cryptocurrencies. At the same time, this has also dragged down other crypto assets, such as Solana, with a high presence also in the Alameda Research's portfolio. Binance, one of the main players in the crypto asset market, offered its financial support to FTX. However, less than 48 hours later, it backed out, leaving FTX on the verge of bankruptcy. I'm sure you're wondering, what impact is the FTX crisis having on Bitcoin and the rest of the crypto assets? Bankman-Fried related crypto assets are among the hardest hit. For example, Solana, it's lost more than 32% of its value thanks to the Bankman-Fried being one of its initial investors. The same goes for other assets such as Bonfida, Radium, and Maps, which have shed an average of 40% since the start of the week. Bitcoin and Ethereum, the two most popular assets in this space, have also been hit very hard. The former hit its lowest level since 2020 with an 11% loss that touched 15,400. Analysts at JP Morgan estimate that this would not be the floor for Bitcoin, which could fall as low as $13,000. However, though, all is not lost for the world of crypto, and much less for Bitcoin, since the co-founder of the asset trading site Decentrader, Philip Swift, assured that based on on-chain metrics, the bearish season of the Bitcoin price is about to end, and that this is a moment of opportunity for all investors. In an interview with the specialized media Cointelegraph, Swift stated that this moment is a point of maximum opportunity for Bitcoin, as there are numerous key metrics in look into Bitcoin that indicates that there are major cycle lows. The crypto specialist clarified that long-term investors are at their peak, and this usually occurs in the depths of the bear market, as they currently don't want to make profits until the price moves higher. Swift also highlighted that the tourists dabbling in the Bitcoin market, they've left, and that the only ones that are left are the ones that are passionate and committed to cryptocurrency. Based on this, he asserted that these investors will be the ones who stand to benefit the most in the next uptrend, as long as they don't go crazy trading with appeasement. Everything that is happening with the FTX, Grayscale, and other exchanges, in addition to the existing fears in the crypto markets that have triggered unimaginable drops, is likely to bring out the stronger regulation. Regulators are likely to get stricter with the crypto industry after this development. International analysts expect the proposed U.S. crypto bills to be modified, which could further delay regulations of digital currencies. In the same sense, Wall Street giant JP Morgan expressed itself, issuing a devastating prediction on the price of Bitcoin, warning that the cryptocurrency could continue to fall another 25% after the collapse of FTX, even after the bank bet on this type of asset. All is not lost. Now we're in control, not the institutions. And that is because the company specializing in cryptocurrency analysis, Glassnode, explained about the Bitcoin outflows from exchanges after FTX filed for bankruptcy. According to their analysis, minority investors, i.e. us again, started holding Bitcoins more than large investors. Shrimps had increased their coffers with 33,700 Bitcoin, crabs about 48,700 Bitcoin, sharks about 78,000 Bitcoin, and whales at 3,600 Bitcoin. According to Glassnode's figures, the total accumulated Bitcoin will be about 164,000 Bitcoin, and this was after FTX bankruptcy was known. This data would support Crypto Tony's theory, which states the market is currently in control of minority investors. The truth of the whole situation is that some doubts are beginning to arise, including investor lawsuits. Let me ask you this though, if crypto assets were under the supervision of regulators, could this situation have been avoided? See, digital assets, they lack supervision, even though their strong growth in recent years has led different governments and supervisors to accelerate the implementations of certain regulations. In Europe, the European Parliament is expected to vote February of next year on the final text of MiCA, a vote that has been postponed and should have taken place last week. Experts believe that in the absence of specific regulations, crypto assets exchange platforms will advocate greater transparency and encourage proof that reserves are guaranteed and segregated from the investors' deposits. Just as I said a few minutes ago, the future of Bitcoin is quite blurry, as even the most seasoned experts are not sure about exposing their capital. However, the important thing is to have all the necessary information to be able to process all of these events that are happening, and that we can prepare ourselves, especially our pockets, when we see that kind of news. For the moment, it only remains for me to tell you that you will always have to protect your money in the most effective way you can. So I hope this video has helped you make a decision. Do you think this whole situation could have been avoided? Let me know in the comments along with any feedback. If you like this video, I invite you to subscribe to the channel and also turn on those notifications so you don't miss any new videos. Until next time, I'll see you guys in the next video.